Hello and welcome to myfinancesteacher.org. In this video we will see how many gaps appeared on the charts of S&P 500, gold price and GDX since the beginning of January 2018, and what percentage of those gaps filled or closed and how fast they were filled. This topic was actually suggested by one of the viewers on my YouTube channel, so thank you Vito Urso for this interesting question. And one thing before we start with S&P 500, click that like button right now. Subscribe to the YouTube channel if you haven't, and share this video with your friend. I would really appreciate that. Thank you. So generally in finance, we state that most of the gaps fill, most of the gaps get closed. But let's actually verify this looking at more recent data. Let's verify this statement. As I mentioned, our data includes the period from the 2nd of January 2018 until the 5th of June. That's last Friday, and that is 2.5 years. During this period, S&P 500 actually gave us 85 gaps in total on the daily chart. And out of these 85 gaps, 50 gaps, or 59% of them, was filled in the next 10 days. 59 gaps, or 69%, were filled in the next 20 days. And 65 gaps, or 76%, were filled in the next 30 days. And I emphasize 30 here because I think it's interesting. Checking what percentage of gaps is filled within 30 days kind of makes sense because short-term daily cycles on S&P 500 usually last for about a couple of months, which allows us to assume a potential duration of a rally, the first part of the cycle, or a decline, the second part of the cycle, of about a month, about 30 days, let's say. That's if the cycle top takes place near the middle of the cycle. So this assumption means that over 3/4 of gaps that appear near the middle in terms of duration and near the top of the cycle, like on this chart, would be filled in the subsequent declining phase into the end of the short-term daily cycle. Or, on the other hand, alternatively, over 3/4 of gaps that appear near the end and near the low of the cycle, like on this chart, would be filled in the subsequent rally into the new short-term daily cycle. Now looking at S&P 500 itself, the most recent gap, which took place last week, appeared over 3 weeks into the short-term daily cycle. And if the resistance at about 32.15, that's the resistance based on the late January lows, turns the ongoing short-term daily cycle back down, then there is a good chance that this most recent gap will be filled. Next, let's have a look at gaps on gold price and GDX charts and how do they get filled? How fast does that happen? So looking at gold and GDX, gold itself actually only gave us 2 gaps within this period since the beginning of January 2018. So I think GDX is more interesting to look at because it actually gave us 46 gaps. And out of this total of 46 gaps, 31 gaps, or 67%, were filled in the next 10 days. 34 gaps, or 74%, were filled in the next 20 days. And 35 gaps, or 76%, that's over 3/4, were filled in the next 30 days. Now, the most recent gap on GDX is over here between $33.6 and $33.9. And that gap appeared last week. And as gold is now on day 38 of its short-term daily cycle, and as these cycles last for about 1.5 to 2 months, I think we are close enough to the end of the cycle. So we're close enough to the rallying stage of the next cycle. So for that reason, I think there is a very good chance that this gap on GDX, which is just a little bit above the current price, will very likely be filled soon. Maybe within the next couple of weeks. Now, if you are new to myfinancesteacher.org, I'll send you a confirmation email for new post alerts so you don't have to check for new updates manually. For now though, have a nice day and good luck in your trades.